How important is the Fed meeting, actually, now that we really kind of know what the Fed is likely to do? The question, I suppose, is whether they cut a quarter point or a half.
Yeah, I think that's the answer is, do we know? Because I think the jobs report's going to tell us a lot. The PCE report comes out on Friday, and we'll see what that looks like. I think we're headed towards normalization. Unless something crazy happens there, that's probably still in this 25 basis point mode. The only question would be is if we have a severely different jobs report, where severely worse, I would say, then 50 is on the table. But from our side, we still see the most likely scenario as 25 basis points. But the jobs report is probably our biggest catalyst for changing that going forward.
When you say normalization, you're talking about a normalized interest rate level, I suppose. What is that, and what effect would a normalized interest rate have on stocks, bonds, and the economy?
Yeah, it's a great question. When I talk about normalization, I'm talking about inflation. We've largely been saying that the next 6 months, inflation is just going to be less of a story, right? And so economic growth is going to be a much bigger story going forward. Are we going to continue, as inflation normalizes, continuing to grow? So from the interest rate side, there's not a lot of incentive to keep things elevated if we're worried about economic growth. So if this starts to come down, I think a normalized rate could be, 3 cuts in the next 3 meetings, right? I mean, that's a standard kind of rate cut cycle. And so what that does is, obviously short-term rates will come down. Long-term rates are already kind of infusing that, right? As they're at 3.8% on the 10-year rate. That's not an aggressive rate over long periods of time. So we could be stable in longer-term rates and coming down in short-term rates, which again, if economic growth is fine, I think the stock market would treat that just fine, and we could continue to go higher from here.
We have seen a lot of coverage of NVIDIA today as those shares remain suppressed following the earnings beat. Where else in tech are you really interested right now? I note that you own Salesforce personally.
Yeah, I think the biggest thing in tech, what I'm not hearing as much about is I hear a lot of consumer-oriented AI. I'm actually a little bit more focused on enterprise-oriented AI, business-to-business AI, because I think that's where you could get lots of efficiencies, data analytics used to actually making business decisions that increase earnings. So from that side, I think who's going to help you out with that? And I lean on the software guys for that, being Salesforce.com. I think we haven't seen it yet, but I think an inflection point could be coming in the next couple of years for them. And another one I look at as more of a value-ish type of play is Oracle. They could play in that same space, and they're trading at a multiple that's like IBM, even though they're growing twice as fast. So from my side, that's the area where outside of the horsepower of the NVIDIAs, where I think the next gen could be.